Golden Investment Rule 6 Habits to Become Successful Investors. Have you ever wondered why some investors like George Soros, Warren Buffett, can become billionaires while others only get average results? The strength of investment in asset building and achieving long-term wealth goals has been proven very often. However, not everyone takes advantage of all these advantages. So what makes the difference between successful investors and the rest? Here are 6 shared habits from successful stock investors. 1. The market is always led by a group of stocks. Certain groups must be identified. Normally, every strong market rally will be led by a group of stocks. This group increased very strongly, creating a spread to the whole market so that some other stocks increased, then the index also rose and vice versa. For example, in a market uptrend, the leading stocks themselves often increase 3 to 4 times the overall market. That is, if the market increases by 20%, this group can increase to 70 to 80%. Therefore, selecting the leading group of stocks to follow is a very important thing in investment. 2. Combine graphs and choose the right time to invest. Sometimes on the market, many investors still ask why they have chosen the best companies to buy stocks, but then the market price is still declining. From the author's point of view, buying good company stock is not enough. One of the other important factors is to choose the right time. Using technical analysis with statistical charts of stock index fluctuations from 50 to 150 sessions can help investors grasp the trend. In it, suppose the blue line on the graph represents the evolution of 50 sessions, while the green shows 150 sessions. When the blue line is above the green, the market is in an uptrend and vice versa. These types of charts investors can use through a number of available software and simply enter the data. Whether self-statistics or processing software, try to recognize in time the philosophy of always buy stocks in an uptrend and immediately sell as soon as you realize the decline starts. 3. Learn quickly and decisively to seize opportunities in investment. There are thousands of good opportunities in life every day. Opportunities are inherently more likely than we can grasp. Opportunities include work, investment, and love. Of course, we can't afford to love anyone we meet. You cannot do all the work in the world. And you also cannot make all investments. Many opportunities are unattractive, so pay attention to the opportunities that find yourself attractive can bring the best results. Then concentrate fully on any problem. The door of opportunity, also known as the time period that you can perform, is extremely scarce. You can meet someone you like, but you only have 30 seconds to introduce yourself, or that person will come out of your life forever. An interesting job will not wait for you forever, but there are many people competing with you. Similarly, the investment door can be closed daily, hourly, or even seconds. No matter what opportunity you are looking for, if you don't act decisively to win it, others will do it for you. You must be open to the opportunity, ready to take them and ready to move forward. If not, there will always be someone who will win you. 4. Hard to learn constantly and keep in mind that there will never be absolute perfection. In every aspect of life, we are always looking for perfection to the extreme. However, when making actual decisions, it is not possible to have an accurate answer to every question, but instead many results occur in the form of success or failure. Also, on the stock market sometimes there will never be absolute perfection. Investors cannot buy all stocks when their prices are low, and they cannot sell at all when the stock is high. If we manage investment in this way, we can only rely on luck. Everyone has times to make wrong decisions, even many times. In securities investment, we may be wrong more than the right and successful times. That's why every investor needs to continually improve himself and learn from the previous experience. 5. Don't let greed and fear overwhelm the long-term goal of investment. Very ordinary emotions are probably the biggest enemy of an investor. Therefore, the key to success in investors, whether you are investing long-term or surfing, is discipline. All transactions must be in a plan. You must know exactly what price you will sell, high or low. Better still, place stop orders with each buy order, because as soon as the market starts to fluctuate, things become elusive. People often think that choosing a drop point to enter a transaction is difficult, but it is much harder to determine the drop point to get out of the new transaction. You think it's easy to take a profit or cut loss, but once you hold a fast-moving stock, your fears and greed will quickly make you unwise and easily lose money. 6. If you have a loss position that makes you feel anxious and have no mind to do other things, immediately exit. Because you can always come back anytime. The investment genius said that traders have two important assets to protect. It is capital and faith. Trading that makes you worry, insomnia, it is not a transaction. It will erode health and belief in you. Money is still hopeful. Never let a heavy loss make us unable to return to the market.